You are listening to the Marc Guzman podcast experience.
And the very first topic we're going to be covering is taxes and basically tax refunds. Right now, tax refunds are about $6 billion short, going back to Americans. 20% of Americans, though, do feel like they've paid less in taxes. However, the tax plan still has a 49% disapproval. And I think there's also a lot of misunderstandings with this tax plan, because one of the big key elements of the tax plan is if you're an entrepreneur, if you're self-employed, if you're making under, I believe the limit's 120,000, you get to take an additional 20% deduction off of your tax liability.
Correct. Yeah. It's still kind of vague as to how that's happening. But the majority of people who are kind of complaining are primarily going to be W-2 employees who already have taxes withheld from their regular paychecks. And so typically those individuals in prior years expected larger refunds. And in many cases now, they're not receiving the refund that they once had. And some of them, just from clients who've called me and we've looked at their checks and tax returns, it's because they were still getting more of their actual net paycheck every month. And so therefore there wasn't a big refund coming at the end. And in other cases, there are people who are just actually paying more in taxes, but it's a bit of a disparity as to how all this is settling out, especially with this new tax plan.
Now, one of the things about the tax plan is that it's capped state income and property tax deductions at $10,000. So this is going to be interesting to see how it plays out in the housing market this year, because this is the very first tax return that people are filing and discovering how the new tax reform is really affecting their own personal finances. Now, in California, where you have state income tax of, what is it now, 10%, 10.1, 10.2%, something like that?
It approaches about 12%.
12% now. Yeah, so we have a very expensive state income tax here in California. And then on top of it, you've got property taxes. Now, you do have Prop 13 that limits property taxes and how much you actually pay every year. However, when you're buying a property for $700,000, your taxes are going to be anywhere from $10,000 to $15,000 per year. So with that in mind, you have property taxes that are well above $10,000. You have state income tax, depending on how much money you make, probably well over $10,000. Yet before, you could deduct the property tax and deduct the actual state income tax off your federal taxes in order to get that deduction. However, now you're capped at $10,000 total combined for those two, which means anything over that, you're paying taxes on it. And I think people are getting sticker shock now because of it.
Right. In the past, when you take the taxes off, you were allowed to take your entire property taxes off from your primary residence, from your gross taxable income. You could be taxed on a lower amount, even though you might be taxed at the same tax rate. The savings would be a lot larger. And now, because of the cap, people with larger or more expensive properties that are paying larger amounts of property tax, well over 10 grand, as Mark said, they're not seeing that. They're not seeing the huge savings that they had in the past. And so this is a big part of the sticker shock that everybody is complaining about.
Now, when you own an investment property, you treat it as a business. And one of the biggest, I don't know if misconception is the right word, but many people think, okay, I'm going to pay more in property taxes. That's going to affect my investment property. Well, that's not necessarily true, because investment property is ran like a business. You have income minus expenses, your net profit at the end of the day.
And in fact, it's run so much like a business that many cities require business licenses when you have an apartment building, and they're even beginning to do so now with single family residences, right? In fact, there's various cities that are beginning to follow suit from prior cities that have already imposed the business license tax, just an additional revenue for them. In fact, I had a client call me yesterday asking me about a business license requirement for her single family residence in Hercules. Now, this is still something that's up for debate, because the city of Hercules is primarily trying to argue that on condominiums that were originally built as multi-unit, very similar to apartment buildings for rent, Again, keep the distinction
clear.
That's
a very vague description, which I argued with the city of Hercules on that one.
And so it's a big debate right now. Multifamily is usually for rent, right? Yeah, like 12-unit apartment building. And then that's very different from individually owned condominiums that are part of a 12-unit development or a 100-unit development. And
I argued with the city of Hercules that, well, I can understand if the HOA complex as a whole needs a business license because they're operating a giant homeowners association, but for each individual owner to get a business license, that just doesn't make sense.
Just to kind of wrap that up, apartments or rental property, you could still write off the entire property tax. It's just on your primary residence that used to be a big savings that there's now a cap, and this is causing people to pay larger amounts of taxes. So my answer to that is buy more real estate, create more depreciation, and offset that. But anyways, that's a topic for another time.